Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look at the technical picture of the euro currency. So the starting point of the next week will be full of the tricky moments by the few reasons. So those of you who are watching our videos probably remember as in Friday we said that potentially we could get the grabbers on the weekly chart, not only on the euro currency but also on the dollar index. And the first tricky moment is that on a dollar index on the weekly chart at this point we have the grabber, suggesting the strength of the United States dollar. While on the euro currency, if we'll take a look at the futures chart, you do not have this grabber. On the weekly retail broker chart, in my situation this is FXCM, on the weekly chart we do have the grabber. So I even keep the marking of last week here. So the question is whether we have this pattern or not. To be honest guys, I am tending to believe that we do have a pattern by the two reasons. First of all, dollar index is still exchange traded asset, and on the euro currency price still stands very close to the MACD, just around it on the futures chart. This might be the technical nuance that occasion that has happened, so that the moment of the close and opening price market just passed between these two candles as we have on the futures price. So but additionally, if you will take a look at the 10-year bonds, you could see the performance here on 10-year bonds. Just a moment. Take a look what the performance on the 10-year bonds we have. Straightforward action above the 4.3%. This is really strong performance, and it definitely supportive to the dollar. That's why taking it together 2 plus 2, I mean dollar index and the 10-year bonds, is together gives us a, well, more or less significant background for dollar strength. That's why despite that we do not have the grabber on euro, it doesn't mean that it's not exist. So that's the first point. Second moment, the same pattern but on lower time frame. Once again, on the euro currency on the daily chart, we do not have anything. Nice downside pullback out from the fib level, just great. Response on the gutter is triple to sell, everything goes well. Trend has turned bearish. But if you take a look at the dollar index, you will see that here we also have bearish grabber. That suggests some downside return below this area, which means that on the euro currency we could get significant retracement above this top. Theoretically, both grabbers could be valid. For example, it might happen that market just move above this top, but will keep untouched this top, and bearish weekly grabber on the euro currency remains valid. But another question here arises is what particular triggering factor should come that could push euro currency on the back. From the technical picture, it absolutely we can't make this caveat from the technical picture. It doesn't suggest that it should happen. It means that it has to be some external factor. Now we should recall that in the middle of the week we will get the Fed meeting. Currently, as you understand, overall sentiment and anticipation of the next Fed step is under revision. So traders start thinking about higher rates for longer term. So higher interest rates for longer term, sorry. And now this performance actually reflects this changing of the market view. But if Fed will say nothing about that, everything could happen. So market theoretically could show this upside bounce. So the question is what we have to do in the current environment when we have in the middle of the week the Fed meeting, and we have so sophisticated combination of the different patterns, how we're ready to deal with them. So the most simple solution probably is to wait until the Fed meeting. Maybe because we have a grabber on the daily dollar index, maybe until this meeting, this grabber will be erased already if market will keep going lower on the euro currency, higher on the dollar index. And the problem will be resolved by itself. But if not, we could wait until the Fed meeting will happen and see what the result will be. So one of the possible events, if the grabber will work, we could get perfect entry point around the top if market will show a significant bounce. This is the first approach that we could make. Another approach stands on lower time frame. So if we'll take a look at the 4-hour time frame chart, you could see that market still stands around confluence support. And by the way, together with the grabber on the dollar index, the OP existence that it still has not been tested could mean a lot. So together they create some worrying combination for those who would like to go short. And in another way, so for example, we could wait for response, some upward bounce here to some of the predefined resistance levels. Anyway, it will be better to sell right there just because we will be closer to the top and potential risk will be smaller. Additionally, we could cut the trading volume. So not take the ordinary lot, but just take the half of the normal lot that we are trading. And watch for a strong level, such as, for instance, 109.15, 109.25 area. It's a combination of the confluence and the XOP here, and some resistance where existed will be some compromise decision between the do nothing and jump in immediately. So with the stops, of course, above the OP area on the daily chart, because we're dealing here with the big weekly bearish grabber, potential grabber, and suggesting that our head and shoulders here starts working. So we actually suggest that this might be the starting point of the significant downside continuation. And in general, as I said, performance on the 10-year bonds also support this, at least for now. So that's actually two options that we have. Currently, we're not considering taking any longs position, only if you trade on very small time frames. Theoretically, you could think about this and this possible upward continuation, but it's too small scale for our analysis. We're watching for a bit more extended time frames. That being said, in general, overall context remains bearish. Corresponding action on the other markets, such as dollar index, 10-year bonds, confirms that it's bearish. But we have a slightly risky factor in the middle of the week. That could change everything. And we offer the two options. First, as usual, do nothing and wait when the numbers or Fed statement will be released, and see how market will react. It's one of the chances that we could get much better entry opportunity if market will show the upward bounce. Or if still we do not want to wait, especially if dollar index somehow, grabber on the dollar index somehow will be erased in the first two sessions, on Monday and Tuesday maybe, we could carefully try to take short position with the smaller trading lot at one of the resistance areas. Supposedly it should be somewhere around between 109.15 and 109.40. This is 618 level, this is 50% and confluence, and XOP as well. That in two words that we intend to do on euro currency on the next week.